Ladies and gentlemen, good day and welcome to Capacit'e Infra Projects Limited Q1 FY23 results conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I'll now hand the conference over to Mr. Rohit Katyal, Director and CFO of Capacit'e Infra Projects. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of Capacit'e, I welcome everyone to the Q1 FY23 earnings conference call of the company. Joining me on this call is Mr. Alok Mehrotra, Mr. Nishit Pujari, and our IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Before I begin the review, a brief disclaimer. The presentation which we have uploaded on the stock exchange and our website includes the discussion during this call, including the discussions during this call, may contain certain forward-looking statements concerning the company, its prospects and profitability, which are subject to several risks and uncertainties, and the actual result could differ from those in such forward-looking statements. We are very excited to start the financial year on a positive note with robust overall performance. Our strong execution capabilities, coupled with repository of asset base, enabling efficient execution, are reflected in healthy revenue growth and profitability. We are witnessing strong execution momentum across our projects and are focused to create value for all our stakeholders. With a healthy order book and sustained order inflow and our expertise in executing and delivering projects on time, we are optimistic that we will witness a healthy and sustainable growth year on. Other key updates. The company was awarded a project from MCGM for a multi-speciality hospital project in Bandip, Mumbai, valuing 670 crores in Q1 FY23. Similarly, a residential project in Navi Mumbai from a prestigious private sector client for 227.45 crores was awarded. Allotment of 31 lakh fully convertible warrants to promoter and promoter group at a price of 160 per warrant. Promoters have already bought in 25% of the upfront amount in the company. Let me now turn to the performance highlights of Q1 FY23. Revenue from operations for the period grew by 70% to 477 crores as compared to 280 crores in Q1 FY22. EBITDA for Q1 FY23 stood at 101 crores as compared to 42 crores for corresponding period last year. EBITDA margin for Q1 FY23 stood at 21% as compared to 14.9% in Q1 FY22. PBT for Q1 FY23 grew to 38 crores as compared to 6 crores in corresponding period previous year. PBT margin for Q1 FY23 stood at 8% as compared to 2.1% in Q1 FY22. PAT for Q1 FY23 grew by 538% to 29 crores as against 4 crores in Q1 FY22. PAT margin for Q1 FY23 stood at 6% as compared to 1.6% in Q1 FY22. Cash PAT for Q1 FY23 grew by 197% to 76 crores as compared to 26 crores in Q1 FY22. Cash margin for Q1 FY23 stood at 15.9% as compared to 9.1% in Q1 FY22. The company continues to focus on working capital management and quality of order book. The working capital cycle, excluding retention, has improved marginally from 91 days to March 22 to 89 days in June 22. Order book on standalone basis stood at 8,229 crores as of June 30th, 2022. Public sector accounts for 68%, while the balance comes from private sector. Residential accounts for 28% of the order book, followed by commercial and institutional at 21%, and mixed-use construction at 52%. We remain optimistic on India's recovery amidst the continuing global geopolitical uncertainty. Before taking the question and answer session, I would like to reiterate the vision of the company. The company stands committed to improving the net working capital cycle and bring it down to 60 days, excluding retention, by Q1 FY24. The company endeavors to reduce leverage levels in medium term by release of retention money. Objective is to continue to improve shareholders' value by investing in people, technology, and processes. I now leave the floor open for questions, please.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and then one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and then two. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Our first question is from Mohit Kumar of DAM Capital. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on a very, very good set of numbers. So my first question on the margin. Margin seems to be pretty high. Is there a one-off in this margin? Is there something which got booked in this quarter related to some project which got completed in this particular quarter, and that's why the margin is higher? Is that a fair understanding?
Yes, that's a fair understanding. There is an impact positively of 8 crores on certain accounting changes, which therefore has resulted in a one-time benefit of 8 crores. Our guidance for the whole year continues to be 18 to 18.5%, as was guided earlier during the last conference call.
There's nothing else, right, apart from accounting change?
Nothing. There is no change, so that has been corrected, and that positive impact on the sales has been 8-odd crores. Net of tax, that's about 6.5 crores.
Secondly, on this Mahada project, I think we are expecting to book 5 billion, if I'm not wrong, in this particular fiscal year. Of course, that will get consolidated in the JV accounting. But I think the order book is almost similar, like Q4. When do you expect the booking to happen in this fiscal?
The overall revenue will be booked at the LLP level, and being 35% shareholders, and as per accounting standard 116, we will not be in a position to book revenue on that. However, the LLP has subcontracted the portion of Capacit'e's work to the company, and it shall be booking the proportional revenue executed through such subcontract for the LLP in its books of accounts. So it will be booking its share of 35% in its books, which could be close to 135 crores odd in the current financial year.
135 crore. Is that?
Oh, yeah, that's right.
Our share. Yes, understood, sir. Lastly, on this ordering opportunity, of course, we are getting more private orders now. How do you see this evolving over the next 2-3 quarters? Are we expecting more residential orders in this fiscal, and the balance between public and private to change materially over the next few years?
I believe that the order mix at the moment is approximately 70% in favor of public sector and 30% in private sector. That primarily should continue over the next 2 years. However, order booking is dynamic. A bigger inflow of order from a private sector could change that by 5% here and there. But on sustainable and or more logical basis, I believe that 70% towards public sector and 30% towards our reputed clientele in private sector is a good assessment to make.
So are there large ordering opportunity from the government side in Mumbai especially?
That continues in all the geographies where we have operated earlier. However, we have in the current last quarter just concluded, booked a substantially sizable order from MCGM and in the healthcare segment, and such opportunities continue to be present. More elaborate details were provided in the last conference call. So company is very optimistic of booking the orders, and that has been reflected over the last 6-7 years of operations of the company. So yes, we are very confident of booking and surpassing the current year targets of order book as well.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you very much. The next question is from Rishikesh Oza of Robo Capital. Please go ahead.
Hi, sir. Good afternoon. So my first question is that quarter on quarter, our depreciation has gone up from 20 crores to 42 crores. So can you please provide some reason on that, and will it remain on this similar level?
You have rightly pointed out. However, the reason for that increase is that, as informed in last quarter, that Oberoi projects were changed from with material to without material. So when the value of the raw material, that is steel and concrete, was removed, that resulted in accelerated provisioning of site establishment, which comes under the depreciation head. This is a one-time exercise, and therefore from next quarter it will be the normal 18 to 20 crores what you see towards the site establishment, and 30 crores on an overall basis. So the excess depreciation which has been booked this year is because of the change in the order from with material to without material in case of one big client.
Okay. So my second question is if you could provide revenue guidance for FY23.
That's too early to say. Let's complete quarter 2, and in the next conference call, I'll definitely give you a guidance.
Okay, sir. And so also if you could elaborate on the accounting change.
As I told you, the accounting change is in line with the industry standards. Ind AS 116 on input, 115 on input method. There is hardly any difference in that, because with now in both the cases is taken at cost plus profit. So the impact of that, as I just answered, was in totality 8 crores, which has been recognized and has been taken into the limited review accounts.
Okay, sir. And my last question is if you could provide a order inflow guidance for this year, sir.
I have always maintained that the company shall book minimum order of what it executes, and which means we should be upward of 2,000 crores in order inflow, fresh order inflow, of which nearly 800 crores has been achieved. So in 9 months we have to go towards 1,400 crores or thereabouts, which is a very doable and task given the track record of the company.
Okay, sir. Thank you very much, sir.
Welcome.
Thank you very much. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and then 1 to join the queue, or star and 2 to remove yourself from the list. The next question is from Deepak Podar of Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So I just, first up, I wanted to understand on the retention money, by when we are expected to get that, and what's the quantum?
So the retention money closing balance stands at 175 crore, out of which we have realized about 10 crores in the current quarter. We expect to issue bank guarantees in lieu of cash retention to our clients starting September end and in October. So our target is to collect close to 120 crores of retention money in the quarter 3 and quarter 4 of the current fiscal. This obviously will come into the cash flows of the company, other than the normal debtor recoveries which happen.
Okay. And what about this quarter? Second quarter, what's the amount we are expected to collect?
We are expected to collect 20 crores, of which 10 crores has already been collected.
Okay. So ideally by fourth quarter, you do expect some deleveraging to happen, right? As you mentioned in the.
I just told you that this is a temporary blip in the gross and the net debt of the company. Mm-hmm. It is directly related to the accumulation of retention money, which is now due and payable against bank guarantee. And on submission of bank guarantees, these monies will get released.
Understood. And what's the status on the rating upgrade that we were looking for?
The rating exercise has already started. I am hopeful that before the next time we meet for a conference quarterly call, we should have some good news for you.
Oh, that's great. That's great. And lastly, on the margin front, I mean, if you adjust this 8 crores, I think our adjusted margin stands at about 19%, excluding other income.
Yeah.
Now, this is the minimum margin level at least we can expect going forward?
It would be too optimistic that we don't expect or factor in any unforeseen. So the margin guidance continues at 17.5% to 18%. Anything more should be taken as a bonus.
Okay. The reason I asked is because I assume that the commodity prices is also going down.
Our order book is non-speculative. When it went up, when we did not make loss. Mm-hmm. So when it comes down, we don't make any profit. It's a pass-through mechanism, which means that if the price is 100 rupees, the client has to pay the difference. And if it goes to 20 rupees, the client takes away the money. So except for increase in percentage of PAT margin due to such price increase or reduction, nothing else is an absolute loss for the company or profit.
Fair enough. Yeah. I got it. Yep, that's it from my side. All the very best, sir. Thank you.
Thank you. The next question is from Mukul Varma, who is an individual.
Hello.
Yes, sir.
Yeah, congratulations on a very good set of numbers. My question is the provision what we had made of 84 crores, as you mentioned in the last quarter, will there be any realization on that account?
Yes, we are in discussion, one settlement agreement with the Radius Group, not Radius Group, the Nilkamal Realtors, which was earlier a part of Radius Group, but now we believe Godrej coming in is finalized. We expect the documents to be signed over the remainder of the current month and monies to be realized in quarter 3. This amount is close to 15 crores. Similarly, we are expecting resolution to another project where the bankers, as per the latest guidelines and GR of the SRA, Slum Rehabilitation Authority, have taken up a project which was earlier belonging to Radius Reserve in Chembur, and the new promoter and the bank supporting them are coming in. So we expect that resolution to happen also in quarter 3 and some payment towards that being realized in quarter 4. So these are the two big resolutions which we expect. And therefore you should expect some write back on the provisions which have been made. But all our projections are given without considering any write back.
So this 15 crores, as you mentioned about Nilkamal Realtors, and what would be the quantum for this SRA project of Chembur?
24 crores.
Okay, great. All right. Thank you so much. All the very best.
Thank you.
Thank you. The next question is from Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, good afternoon, sir. So could you provide a breakup in terms of which all projects contributed majorly in this quarter results revenue?
And also, sir, I do not have project-wise details in front of me. However, we shall advise our IR team to mail it to you very promptly.
I don't want a specific number, so just majorly which all project would have contributed in this quarter.
So this 95% of these revenues have come from the 21 operational projects of the company.
Okay.
With Raymond's, Oberoi, Cidco, and Piramal leading the pack. second led by BSNL data centers, and obviously the other projects like JJ and BMC. As I told you that I don't have the exact figures project-wise, however, that can be provided to you by our IR team very promptly.
And looking at current pace of execution, I assume that upcoming quarter will not have much deviation in terms of revenue, like we achieved 470 crores. So these numbers here and there, we can have.
You have to remember that Q2 these days, June is not a very powerful season for monsoons. Monsoon is more so from July to September. September last year, October also was impacted. However, considering that and the average loss over the last 5 years being close to 21 days, we do believe that we will be closer to your target, what you have mentioned. However, our overall year's target of 1,800 crores is given.
Okay. And lastly, what is your non-fund-based limit and utilized limit?
The non-fund-based limit is at 940 crores, out of which further allocation is 190 crores for LC and balance for bank guarantee. The bank guarantee outstanding is currently at 400 crores and the LC outstanding is currently at 175 crores.
Okay, thank you. All the best for upcoming quarters.
Thank you.
Thank you very much. The next question is from Ron of Mad About Stocks. Please go ahead.
Thank you for the opportunity. So my question is, in the long term, what are the emerging trends that you see will drive the growth for Capacit'e? I understand hospitals focus from Government of India and plus COVID giving a boost to co-working has been driving Capacit'e's order book. Any other trends that you foresee that will drive Capacit'e's order book in future?
Good question. You see that there is an overall optimism around the real estate industry starting Q3 of 21. That continues. That is relevant from the financials of our clients. So that announcement of new projects and award of construction contracts will continue. We have a new player in form of Adani taking over a project that too has been added to our clientele. So I believe that it is quite. We are quite optimistic on the opportunities which the private sector will, present, whether it is residential in super high rise, commercial, retail, or on these three aspects. Secondly, from the public sector side, it is not only hospitals. The growth plans as far as housing for all continues to be in focus, and all our existing clients are planning for projects in current year leading into next financial year. And Capacit'e, with the qualification it possesses, it presents a good opportunity across all segments. Thirdly, the Railway Land Development Authority is coming up with major renovations of its existing railway stations to modernize them. There are total 172 stations. The tenders have already gone live, and we believe that Capacit'e will have a good opportunity in that as well. So apart from hospitals, or we call that healthcare, institutional, hospitality, retail, commercial and residential, railway station redevelopment, airport modernization or modular expansion will present an opportunity to Capacit'e in the years to come. So since Capacit'e is present across the gamut of all the sub-segments of construction and has the specialization and the equipment base, we are optimistic on capitalizing on this opportunity.
Oh, awesome. Very, very nice to hear the comprehensive response to that question. My second question, sir, given the hub in Mumbai, and Mumbai has a huge redevelopment opportunity, is Capacit'e looking?
I can't hear you clearly.
Sir, am I audible now?
Yes, better.
Okay. So given Mumbai has a huge redevelopment opportunity, will Capacit'e be looking at this opportunity in near future?
As a construction company, yes. As a developer, no. MHADA is the largest redevelopment project on cash contract basis in Asia. However, you know very well that redevelopment projects take some time to kick off. So while we will be present for some decent sized projects, we may not look at every and all the opportunities that may arise out of this. Secondly, we will be skeptical of doing private sector projects as far as redevelopment is concerned because of the size and obviously the risks attached post the IL&FS debacle which we have faced and all of you all are aware. On the government side, as I just mentioned, some opportunities will come up in MHADA. It will come up in Mumbai Municipal Corporation, Thane Municipal Corporation, Pimpri-Chinchwad, and so on. And we shall look at them on a case-to-case basis.
Thank you. Thank you so much, sir. Wishing you all the best for the next coming quarter. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and then 1. If you wish to remove yourself from the question queue, please press star and then 2. The next question is from Jitin Rushi. Please go ahead.
Yeah. Good afternoon, sir. Thank you for taking my question and congratulations on good set of numbers. So my first question was on the updates on SIDCO project. So just one thing, what revenue we have booked in Q1 and what is the run rate we are expecting from the SIDCO and have we received the 7th land parcel?
So the Q1 revenue booked in SIDCO is 75 crores on certified bill mechanism. All right, and we believe that we shall book close to 100 crores in the monsoon season. Thereafter, we shall be booking 50 crores in quarter 3 of the current fiscal. That means 50 crores per month. So 150 crores in quarter 3 and close to 180 crores in quarter 4. So you can add up the total and that shall be giving you the revenue for SIDCO for the current fiscal.
And on the 7th land parcel, when can we expect the land parcel?
7th land parcel in writing has been received. However, being monsoons, the excavation activity cannot start at the moment. So we shall be only taking possession once the monsoons are over.
So basically then we will have a full executable order backlog from SIDCO.
Absolutely, but the current order backlog from SIDCO continues at 2380 crores, which is with the interim extension in place and second extension going on by the client. We already have our hands full for the next 3 years, even if you consider 600 crores per year.
So then next year, what kind of execution we can see from SIDCO probably once you have the 7th?
On conservative basis, 600 to 700 crores minimum.
Right. That is a yearly run rate you're talking about, right?
I'm talking about yearly run rate, sir. You can see a better figure, but since you are asking for a project-wise specific number, I'm giving you an approximate number.
So in this project, so we only using mold only, right? So in SIDCO project, we are using mold for foam work for doing the construction. So sir, is the capex still pending for the foam work because we are still to receive a 7th land parcel? So obviously the building will start, which is a larger land order backlog of the SIDCO project. So what kind of capex we can see?
Yeah. So as explained last time, we already have purchased total 18 sets which are at project site. 18 sets translates in full swing of 54 slabs or 54 floors per month, which therefore translates into 50 crores of billing. All right. Of course, in monsoons you will have obstructions. This is apart from the 6 sets are under manufacturing. We had given a projection of 42 crores for the current year as far as balance SIDCO procurement is concerned, and it will remain at that level, give or take 2 crores here and there.
So for the 6 homework which are supposed to receive, the cost is 42 crores, right?
No, including what has been received this year, plus whatever has to be received, the cost is 42 crores. This cost is subject to the aluminium price, which is which was at its peak. Fortunately, it has come down, but the budget approved at the moment for aluminium formwork in the current financial year for the remainder is 42 crore in totality.
So we have received how many this year so far? Just for
saying out of 24 sets, 18 sets are at site, 6 sets are balanced to be received.
No, so just you said that 42 crore including the what you have received this year. So all 18 you have received this year. Okay, got it. Okay. And sir, on the MHADA project, what is the status like? We were supposed to book some revenue from the MHADA project going forward.
10.77 crores of revenue has been booked. The project is in piling, and we have come out of the basement, which is now not as RCC structure, but on piling, the superstructure will be constructed. 2 sets of aluminium formwork are at site. And given the intensity of the monsoons, we should be starting the superstructure construction by this month and early next month. So as I told that our share of close to 135 crores is what we are looking in the remainder of the year to book.
So sir, what is the executable portion of our share in the MHADA order backlog right now, which we are considering?
The LLP has given an order of 1,400 crores to Capacit'e Infra for the rehab portion, which is 35% of the 5,000 crore of rehab portion.
This will be done next 2-3 years, 3 years, right?
The completion period is 27 months from handover of individual building. So this includes design charges, all put together, 11 to 12 towers. At the moment, work on 2 towers at Capacit'e has started. We expect to start other 6 towers in the current year. So you can safely presume 1,400 crores divided by 11 towers, what is the value per tower? So if we have started 2 towers, we have started work on 280 crores. As soon as we start the work on next 2 towers, the value will go to 480 crores. Since it's monolithic casting, we do believe that the construction speed will be quite good, and therefore we are anticipating a revenue of 135 crores in the current financial year.
Probably we can see good run up next year onwards.
Absolutely.
And sir, sorry, on harping on the depreciation part. So probably from coming quarters we will not see such high depreciation. This is just the one-off for that.
As explained, you have to take a depreciation of 30 crores. As the revenue increases, your write-off of temporary structures and site establishment will also increase. And therefore, it will be close to 30 crores in absolute terms. But if the revenue goes beyond 500 crores, it could increase also.
So any capex other than the Sidco capex which we are planning for this year, 40 crore or 40 to 42 crore, any other capex you are looking at?
At the moment, no. At the moment, no order has been taken which will require additional capex. However, it is directly proportional to inflow of orders. The company is looking to book orders which do not involve further capex because we would like to increase our asset turn. However, if there is any such order, it will be promptly intimated to you during the next conference call.
So my last question in terms of bidding strategy. So are we looking to bid for what we have seen in Oberoi recently, that the materials are supplied from customer and we would just do the execution? Are we looking for such type of bids, or we are looking for?
We are not averse to such type of bids because we have our margins covered. And we are not investing from working capital as far as steel and concrete is concerned. So there is no harm. So you are definitely sacrificing. So let's say if you are doing a revenue of 250 crores for Oberoi in a year, so obviously you are sacrificing 40% of that because of having free issue material. But similarly, the returns on revenue go up, so the PAT margins will be higher. So if you see our revenue for the current year, in spite of having 2 major orders, one from Oberoi and second from State Creators, which involve steel and concrete as free issue, there has been substantial increase in the revenue. So that will continue for the remainder of the current financial year. And yes, we are not averse to the client giving steel and concrete on free issue or issue basis. Whatever reduces our working capital cycle, we will definitely look into that.
Okay. Okay, sir. Thank you and all the best. That's it from my side.
Thank you very much. The next question is from Parvez Qazi of Parvez Securities. Please go ahead.
Hi, good afternoon, sir, and thanks for taking my question. So a couple of questions from my side. First, sorry, I missed the revenue contribution from the MHADA project this quarter.
10.77 crores.
Sure. Second is, what would be your bid pipeline currently, and what is the competitive intensity that we are facing nowadays?
See, the company is well poised and placed to pick and choose at this moment in time, and therefore we are not bidding for government projects which are below 350 crores or so, simply because the competitive intensity increases in lower value projects as far as public sector is concerned. And when the projects are above 400, 500 crores, the competitive intensity is lesser, and you have more mature players, competing with each other. Therefore, the pricing comes as fair. That's number one. Number two, in private sector, it was never a competitive intensity. It's more of you being chosen on your technical competency and capability by the client, and subsequently it's an open book policy. So we continue to work accordingly. As far as the bid pipeline is concerned, if you talk in general, all India basis is very, very strong. But if you talk from Capacit'e's perspective, we are looking at geographies where we have already worked, and we do believe that there will be an opportunity of more than 45,000 crores in the remainder of the year to bid for, of which we will choose the projects to our liking, which can be ITA accredited or PAT accredited. So that is the philosophy which we are following. As far as the total order book is concerned, we're looking at upward of 2,000 crores to be added, of which 800 has already been added.
Sure. And you did mention that we are witnessing an improvement in working capital, and this trend will continue going right. So where do we see our debt levels by, let's say, this fiscal year?
You will have a more clearer picture by the end of quarter two, but I do believe that release of retention on gross basis should lead to a reduction of 60 to 70 crores in the debt level.
Sure. Thanks. That's it from my side, and all the best.
Thank you very much.
Thank you, sir. Ladies and gentlemen, a final reminder, if you wish to ask a question, please press star and then 1. The next question is from Ankit Babel of Subcon Ventures. Please go ahead.
Yeah, good afternoon, sir. My question was again on the debt part, which you just answered. So what was the gross debt at the end of Q1?
356 crores, and the net
356.
debt 356.
Okay.
That is including the promoter's debt. Excluding the promoter, it continues at 314 crores.
314 crores. And on this base of now, assuming that promoter debt will be converted into equity, so now this 314 crores debt, you expect 50 to 60 crores of reduction by the end of this year, right?
Absolutely. That is directly proportional to release of retention as explained in my earlier answers.
Okay. And this takes care of the fact that your working capital will also reduce from current 90 days to around 70 days by the end of this year, excluding retention money.
Net of retention, yes. And that's the reason for guiding for reduction in the capital. That means reduction in debt. If your working capital cycle increases, the debt cannot reduce.
Okay. And so lastly, what will lead to this reduction in working capital from 90 to 70 days?
The collection efficiencies. We are talking about retention, that is long-term receivables coming into the system. And as I have explained, that 120 crores are already due and receivable, awaiting submission of bank guarantees. expected to be realized as 20 crores in the current quarter and balance in the quarter 3 and quarter 4 of current fiscal. So this is when such money comes into the system, it acts in two manners. A, it can reduce your overall debt position. B, it will reduce your total creditor level, that is utilization. But most importantly, it reduces your debtor level on a consolidated basis. Therefore, the net working capital will reduce on account of two things. Number one, release of retention and the money coming into the system for utilization by the company, or reduction of debt. And number two, and more importantly, the clients now paying on time. That will be the second big positive. If you see over the last 5 quarters, it has come down from 117 days to 89 days now.
Mm-hmm. So, sir, if this receivables comes down, can there be any benefit in your ECL provisioning? I mean, any write-backs or future ECL provisions would be lower as compared to the previous one? Any benefit from that angle?
You see that ECL provisioning is a policy which is separate from debtor collection. All right? Yes, reversals will happen as and when the collection happens. And as explained that we are expecting collections against the provisions which we have made. We have received all our monies from Capacit'e in quarter 1 and some part in quarter 2 of the current fiscal. So whatever provisioning was made obviously has been reversed. Against that, we are quite optimistic of 2 major collections in the current financial year. And if that happens, that will positively add to your profitability and the cash flow.
Okay. And so lastly, a lot of your retention money requirement and receivables, you are planning to replace it with bank guarantee. So there could be a huge jump in your bank guarantee charges. So which would be forming part of your interest cost. So just for our understanding, so this quarter your interest cost was 20 crores. Now considering the fact that going forward your gross debt will reduce and at the same time your bank guarantee commissions will increase. So net to net, I mean this 20 crores is the peak number on a quarterly basis and we'll expect a reduction in this number, or you believe that this number will go up in the near term and going forward also?
So firstly, the bank guarantee commissions are at between 1.6 to 1.7% per year. Mm-hmm. While the interest costs are on an upward trend and assuming 9% per year. So there will be a differential, there's a major differential of nearly 7%, which will have a positive impact on the finance charges which are levied. All right, so this is one point you have to remember, that bank guarantee is not an absolute debt. It's a non-fund based limit where the bank charges commission and not interest. Okay. Mm-hmm. Number 2, with the let's say total further utilization of 250 crores in the current fiscal, your bank guarantee charges for the remaining period, that is on an annualized basis, it may be close to 4.5 crores, and for 6 months it may be 2.25 crores. But if the money which is coming in quarter 3 and quarter 4 will nullify this increase, and more or less your assessment that the finance charges will be between 21 to 22 crores is fair enough.
So overall interest cost, what you are expecting, I mean this year I understand that it will take time for it to come down because the money would be realized in the second half. But next year, considering the growth also in your revenue and everything, so what kind of interest cost we should build in our model?
See, as a percentage, it's already come down on absolute basis is 21 crores. So we are expecting finance charges of 83 to 84 crores in the current financial year. In the next financial year, with the reduction of debt, it obviously will come down.
Okay, so you'll peak this year at around 83 crores.
Absolutely.
Okay, sir. That's it from my side. Thank you so much, sir.
Thank you.
Thank you very much. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Katyal for closing comments.
I would like to thank once again all of you for joining us on this call. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarification or feedback. Thank you and see you next time. Bye-bye.
Thank you very much, sir. Ladies and gentlemen, on behalf of Capacit'e Infra Projects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.